morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, the tariff letters are out for the 14 countries by the Trump administration, and while India's tariff rate has not been announced yet, markets could remain in a wait-and-watch mode today also, given the fairly listless scenario we saw in yesterday's trading session also. But if you look at the GIFT Nifty levels, trends are suggesting a muted start for our own markets, and it comes amid a largely lower moves that we saw in the global markets too. If you look at the US markets, that ended overnight lower. They saw the worst session since mid-June, and even the futures were trending lower this morning. If you look at from the Asia Pacific markets perspective, they were also largely the focus has been because that's where largely the focus has been because there the markets were quite subdued this morning. But the impact of these new tariffs, which will be effective from August 1st onwards, was not much larger than what these markets were expecting. Now, why is that? Because if you take an early assessment of these new tariffs, they are hardly any different from those announced during the Liberation Day. If you look at Japan's new tariff rate, that stood at about 25%. Compared to the Liberation Day's tariff of about 24%. If you look at South Korea's new tariff, that also remained unchanged compared to what was announced on the Liberation Day. Kazakhstan, Malaysia also remain the same. Myanmar and Laos do see some reduction, but above that 40% tariffs, that continues to be the case. Bangladesh too, above that 35%. Remember that Vietnam was given 20% tariff rates with 40% transshipment rates. So given both of them are textile hubs, we could see some reaction on textile stocks in today's trading session too. But yes, we cannot rule out any swings in the market today too, given the mini trade deal is still on the way. Coming back to our own markets, apart from the tariff talks, we have the earnings season and more business updates have trickled in. Titan, Tata Motors, all of these stocks we will be discussing in today's trading session. And don't forget, we'll also be taking up your stock related queries. So keep posting them on our live feed and we'll take them up shortly. Now, before we delve deeper into the show, let's quickly take a look at the top headlines, sir.
We've made a deal. We're close to making a deal with it.
India and US complete formal negotiations, and reports suggest that officials have proposed a fair deal that will help labor-intensive sectors. The Trump administration has released tariff letters to 14 trading partners announcing reciprocal tariff effective August 1st. Japan, South Korea, Kazakhstan and Malaysia will face 25% duty, while Myanmar and Laos will face 40% tariffs. Trump says that the new deadline for imposing reciprocal tariffs is not 100% firm, and added that he is open to alternative proposals if trade partners request changes. Stocks on Wall Street take a dip after Donald Trump announces higher tariffs on 14 trading partners. The Dow Jones loses over 400 points, while Nasdaq sheds nearly 200 points. Asia Pacific markets are mixed, while the GIFT Nifty is indicating a slightly lower start for our own markets. Crude oil prices have eased after rising over 2% in the previous session after investors assessed the new tariffs released by Trump administration. Gold prices have also paid earlier losses after Trump announced 25% tariffs on goods imported from Japan and South Korea. Right, if you look at yesterday's trading session, that added just about 10 points to the Nifty and ended above that 24,450 odd levels. But yes, it was fairly a listless session, a fairly choppy session for yesterday's trading session, because we did see quite a range-bound move that prevailed in yesterday's trading session. But yes, Reliance Industries, that emerged as the top contributor to the Nifty's up move. And of course, the broader end of the markets, the mid-cap and small-cap indices, continue to witness profit booking. But yes, the market breadth was on the negative side in the last session, 2:3. That was the advanced decline ratio. And among the sectoral gainers, Nifty FMCG index, that was the top sectoral gainer, given the positive Q1 updates we saw yesterday from Godrej Consumer and the likes of Dabur and Marico as well. On the other hand, on the flip side, we did see Nifty IT and the metal indices. They emerged as the top drags on yesterday's trading session. But yes, coming to the fund flows data, a positive sentiment coming in from both the FIs and DIIs, because FIs stood as the net buyers of the Indian equity markets, buying about 300 crore rupees in the cash markets. DIIs also stood as net buyers with about 1853 crore rupees in the cash markets. But coming to the option queues data, Nifty put call ratio, that has rose to about 0.95 from 0.93 levels, and RBL Bank that continues to be a part of the FNO banned list. Now, just a couple of minutes before we go to the open, 5 minutes to go, but let's take a look at the pre-open rates at how they are stacking up right now. Both of them are still very quiet. Sensex and Nifty, both of them down with a negative bias at this point of time. But yes, we are expecting a subdued start given that global markets are also fairly largely lower after the new tariff rates that has been announced by the Trump administration. But, to understand how the markets are going to behave today and for the remainder of the week, let's quickly get on board with a technical expert of the show. Joining me is Ruchit Jain, Vice President, Technical Research of Motilal Oswal. Ruchit, fairly unchanged markets yesterday. What are the next catalysts that market is waiting for? And of course, it's the US-India trade deal, but anything that you're watching out from the levels front on Nifty and Bank Nifty?
Hi, very good morning, Lavina. Well, we have seen last 3 or 4 trading sessions, the markets have been more of have traded in a very narrow range, and these are more signs of a consolidation or a time-wise correction before we see any kind of trended up move resuming. So even if you look at the mid-cap front, then Nifty mid-cap and the small-cap indices have been showing a bit of negative divergence along with negative market breadth. So from a very short-term perspective, we think that our markets would show some kind of time-wise correction where it would trade within a broader range with 25,600, 25,000, 650 acting as a support resistance on the higher side, whereas on the lower side, 25,200 to 250, where the 20 DEMA support is there, would continue to act as a support. So not expecting any significant trended move on either side. But no, rather, I think no, we are going through a phase of small consolidation within an uptrend, and that time-wise correction could continue for next 1 or 2 trading sessions more.
Time-wise correction could continue. But yes, Nifty FMCG, that was one of the top performers yesterday, Ruchit. Can we finally see some excitement in FMCG stocks going into, in the near term?
Yes, so relatively a pullback move is quite possible over there because this is one index which has not seen any kind of trended up move in last 3 months when most of the indices or the broader markets have also done well. So from a risk reward ratio perspective, this is one space where price wise as well as time wise correction has already been done. So the risk reward ratio is favorable here for a pullback move at least in the short term. So no, yes, FMCG could be seeing a relative outperformance to other sectors in this consolidation, and we could see certain stocks within the FMCG basket going higher from current levels.
Okay. Anything that you're bullish on from the FMCG pack, Ruchit?
So Britannia is one stock which is looking quite positive. Higher top, higher bottom structure is there in Britannia. On any declines, you have seen that the 50 DEMA support is acting. So 50 DEMA is acting as a good support for the stock. So the downside seems to be very limited over there. Britannia, I think at current levels also looks good with support around 5,670. And till that is intact, one can expect an up move towards 6,100 to 6,150.
Okay, all right. How are you viewing the Nifty IT index? Because we have the Q1 results which will be out in 2 days or so. But anything that you're watching out from the large caps particularly?
I think still no signs of resumption of the up move over there too. If you look at since 17th of June, we have not seen any kind of big moves on Nifty IT index as well. So seems more of a range bound moves only. Maybe the results when come there would be a trigger to watch out for any kind of directional move in the index. But on the index front, if you look at the levels, then 38,000 remains a very crucial support. Till that is intact, one can look for stock specific buying out opportunities over there. Amongst the heavyweight, I think HCL Tech is one stock which technically is still looking positive after recent up move. It's consolidating above its 50-day exponential moving average support. So this is one stock which can see a good up move in next 1.5 month. But overall, I think once we see start of the result season, where the IT heavyweights would start coming out with numbers, I think that would be the trigger which would lead to any momentum in the IT names.
Okay, okay. What about from the Nifty realty space? How does the charts look like on that front? We have some Q1 business updates also, which we'll be addressing later in the segment. But anything that you're finding interesting from the Nifty realty index? Because we've seen a little bit of a consolidation move that is coming in from the index perspective.
So all the broader trend for realty space was positive. Since the month of April, we have seen a gradual up move. But on the short term frame, there are some signs of profit booking in the realty names. So from a trading perspective, it doesn't seem that we would see any significant up move. But yes, a buy and dip strategy can be kept on stocks such as DLF is there, or even Macrotech Develop is there, where the move still the longer term, mid to long term trend still remains quite bullish. So I would suggest looking the realty space more from a positional perspective, and stocks such as DLF and Loda, couple of names where one can keep a buy and dip strategy, and in declines along with the market if comes, then at lower levels one can look to accumulate these stocks.
Okay, all right. Just 10 seconds to go before we address the open. But what would be the one-liner trading strategy that investors should adopt at this point of time, Ruchit? Should they actually hold on until we have more clarity from the earnings and, of course, from the US trade deal front?
Yes, I think the broader trend remains positive for the market. From a very short-term trading perspective, you need to be a bit cautious. But if you have a bit mid-term time frame, then I think overall trend still remains intact. After certain time-wise correction, we expect the markets to resume its uptrend again.
Okay, all right. Let's quickly address the open at this point of time. Very quiet start for the markets, and of course, Nifty still testing that 25 400 odd levels. It has slipped below the 25 450 mark, but yes, still defending that 25 400 odd marks as of now. If you look at Sensex, that has lost about 100 points or so at this point of time. Both of them have started the trade on a very quietish note, given that we don't have a lot of triggers when it comes to domestic quick cues to pick up from. Of course, we have some business updates which has been trickling in, but then again, when compared to the tariff deal and of course from the earnings perspective, that is where the markets have been on a wait and watch mode. Coming to some of the sectoral indices where the up move and down moves have been, Nifty Auto Index with about marginally higher at this point of time. Bank Nifty Index also flat in the green at this point of time. Nifty IT Index, like we were discussing, it has opened quietish and of course with a mild set of greens at this point of time. And if you look at some of the other sectoral indices, like we were discussing about Nifty Realty Index, 0.2% gain. Nifty FMCG has cooled off from yesterday, one of the top sectoral gainers yesterday, and today it is opened in the red at this point of time. If you look at the broader end of the markets, mid-cap and small-cap indices, both of them are mildly in the green. So yes, very mild moves that is coming in for the markets. Very quiet start, very snooze mode like we were discussing yesterday also, and today also it looks like the market seem to be quite kind of sleepy at this point of time. If you look at some of the top gainers and losers on the Nifty 50, yes, the top gainer on the Nifty, that continues to be your Kotak Mahindra Bank with about 3% gains coming in. That the lender did post about a double-digit growth in advances and deposits on a year-on-year basis in its first quarterly business update. So yes, on the back of that, Kotak Mahindra Bank stock is doing quite well with about 3% gain, standing tall. Other than that, Tata Motors also with about 0.9% gains coming in despite its muted Q1 business update that we saw. Geo Financial, ONGC, Asian Paints, all of them doing very well on the back of crude oil prices being steady around that $67 per mark. Tata Consumer Products also seem to be doing well with about 0.2% gain that is coming in. On the other hand, if you look at on the way down, flip side, Titan seeing a loss of about 4% cut. After a muted set of its Q1 update, and brokerages have also remained quite negative on the counter and they remain conservative, and that's why we can see a 4% cut that is coming in on Titan. Other than that, Dr. Reddy's Lab with about 1% cut, HDFC Life, Cipla, Power Grid, all of them seeing a cut of about 0.4 to nearly a percent or so. But yes, let's discuss about Tata Motors because that stock has been doing well, one of the top Nifty gainers. We did see that JLR reported 11% year-on-year decline in wholesales units for the first quarter of FY26, and even the retail sales that also fell about 16% or so, reflecting some of the broader challenges which was faced during the quarter for the counter also. Ruchit, it has been a challenging year for Tata Motors, but today the stock seems to be doing well. What lies ahead?
Yes, it has been a relative underperformer within the auto space recently, and still there are no signs of a resumption of any kind of uptrend from here on. But could be some pullback move, in the near term towards 710, 715 kind of level. But no, considering its underperformance within the space, I think until we see a good price volume action coming in the stock, even on pullback move, we have seen that the 200 DEMA is acting as a resistance for the stock, and it is not able to surpass that hurdle. So I think no, it's better to keep a wait and watch approach as far as Tata Motors is concerned.
Tata Motors. Let's talk about the today's top Nifty gainer, that is your Kotak Mahindra Bank also, because we did see that the lender post about a 14% growth in advances on a year-on-year basis, and even on a sequential basis, advances was up about 4%. If you look at from the deposits perspective, 15% on a Y-on-Y uptick and 3% on a Q-on-Q basis. So far this year also, the stock has been doing quite well. The stock is up about 20% or so, and even the brokerages are quite impressed with its Q1 business update. If you look at Morgan Stanley, it has given out an overweight call on the counter, and they believe that the Q1 update shows strong growth despite a muted microclimate. On the other hand, Jefferies has also shared a buy call on the counter, and they've given out a target price of 25.50 rupees per share. And they said that they have delivered a healthy loan growth of about 14% on a year-on-year and of course 4% on a Q-on-Q basis. But yes, the stock seems to be doing well in today's trading session. 4% uptick that is coming in. Ruchit, what is the next level that we can watch out for Kotak?
So it's on the verge of a breakout from the recent consolidation, and I know we have seen that in this entire consolidation, whenever there were no pullback moves, we have not seen any kind of volume-based selling happening over there. So overall, I think if the stock manages to sustain at current levels, and then we could see a move towards 2,280 to 2,300 very soon.
Okay, 2000 to 200 very soon. Let's talk about Bajaj Finance, because that's the first query that is coming on our live feed. Naveen is asking the view on Bajaj Finance from a long-term horizon. Any views on the counter? We did see, the stock did witness a crash in the recent day, but what is the near-term outlook suggest, Ruchit, for the counter?
Near-term trend remains sideways. If you look at the adjusted price of recent bonus and split which has been done, then since the mid of April, the stock is still consolidating in a very narrow range. On the high side, 970, 980 has been acting as a resistance, whereas levels around 900 has become a immediate support for the stock. So not expecting any trended moves in the short term, but yes, since the question is more from a mid to long term perspective, I think overall the mid to long term trend remains positive. Not only for Bajaj Finance, I think NBFC space as a whole, we have seen in the months of March have been showing a good outperformance. Any declines that are coming in, many of the NBFC names are getting bought into. So I think from a bit longer term perspective, we are quite positive that technical structures for many of the NBFC stocks are good. So one can continue to hold on any long positions. And in case if any fresh longs also have to be formed, then one can initiate fresh longs over here. But as I said, not from a short term trading perspective, but more from a perspective of holding it in the portfolio.
Okay, all right. Let's take another viewer query. Naveen is also asking the view on Thangamele jewelry. So far this year, the stock hasn't really moved anywhere, Ruchit, but can we expect any change in the trends in the near term?
Seems more range bound stock only, at least for the short term. But the good thing is that in the recent consolidation, the 200 DMA has acted as a good support for the stock, which is around 1850 levels. So till that 1850 levels is intact, I think overall the stock does not seem to be much negative. So can hold your existing positions, keeping a stop loss somewhere below 1850.
Okay, 1850 stop loss for Thangamele jewelry. Let's take another viewer query on that note. Satya is asking the view on United Spirits, and he's asking whether for adding or averaging for the medium term. United Spirits, if you look at from a 1 month perspective, the stock has been exhibiting a negative trend, Ruchit. Can we expect the underperformance to continue going ahead?
Yes, I think the recent selling that we have seen from the highs, in spite of the rising market, we have seen selling pressure in the stock. The stock has breached its important 200 DMA as well. So even if we see any kind of pullback move in the short term, I think at higher levels we would witness some kind of selling pressure around 1450 to 1480 range, which will now act as a resistance. So one should avoid bottom fishing over here as of now. Major support would be around 1330 to 1300 range. If the stock comes and forms any reversal patterns around those levels, then one can review the stock again. For timing, I would suggest not to do any kind of bottom fishing in United Spirits here.
Okay, all right. No bottom fishing on the counter then. Let's take another viewer query at this point of time. Deepu is asking the view on Paras Defense. The stock has been exhibiting positive trends, from the past 6 months. What is the next target level that we can watch out for, Ruchit, on Paras Defense?
Defense as a space, I think, has done remarkably well in last 3 or 4 months. That up move could continue over medium term. Paras Defense also has formed a good support base around 800, 780 levels. So from a midterm perspective, till these are intact, one can expect an up move towards 1020 to 1050.
Okay, all right. Let's take another viewer query then. Uh, BU Dipankar is asking the view on Senco Gold. He's asking whether or not the stock would cross 400 rupees mark since he's having 800 shares at the price of 350 rupees. The stock is around 363 odd levels also, Ruchit. And yesterday we did see a fairly a decent Q1 business update coming in from the counter, and the stock did react well. Today, however, it's witnessing a bit of a cool off. What can we expect the near term holds?
I think seems the stock would continue to see a consolidation within a range. We have not seen any kind of volume-based buying happening in the stock over last few months, and clearly, whatever pullback moves us we are seeing, the stock is not able to surpass the 200 DMA resistance, which is now somewhere around 400 in the range of 400 to 410. So I think the stock trend still remains sideways, and until we see a breakout supported by good volumes, not expecting any kind of outperformance to come in the Senco Gold in the short term.
Okay, all right. Let's take another viewer query then. Komal Makhija is asking the view on HDFC Bank, and she's asking whether or not the counter would cross 2000 mark at this point of time. Ruchit, any thoughts on the counter? We did see a fairly decent Q1 business update for the private lender too.
Yeah, I think hold on to the existing long positions. The broader trend for the stock still remains positive. We have seen that whatever corrections are coming in the stock since last 2 months, they are more of time-wise corrections. And after a time-wise correction, the stock again resumes its uptrend. So I think this pattern is quite bullish. But yes, it's not that high beta name where you should expect significant up moves in very short term. But keep a bit midterm perspective and continue to hold your long positions. The immediate support for the stock around 20 DMI is around 1965, whereas a bit medium term support is coming around 1930. So you can see that 1965 to 1930 is the entire range where where a good support for the stock is placed.
Okay, all right. That is the view on HDFC Bank. Let's take one stock in focus because that seems to be doing quite well. Naveen Fluorine with about 3% uptick. And this comes on the back of the company announcing the launch of its QIP to raise up to 750 crore rupees by issuing equity shares with a face value of 2 rupees each. Ruchit, if we look at so far this year, the stock has been in an uptrend. Even from a one-year perspective, the stock has been doing quite well. What does the near term suggest?
Yes, I think the chemical space as a whole, we have not seen any kind of set up move in last few months within the entire chemical basket. But selective stocks such as SRF is there, Navin Fluorine is there. These are only few names which are trading around their 52-week highs. This clearly indicates that very selective buying interest is there in stocks within the sector. And Navin Fluorine and SRF, I think, are a couple of names which could continue to see an up move. 4800 to 4750 now is a very good support for short-term support for Navin Fluorine. Until that is intact, we can see a gradual up move for continuing in Navin Fluorine.
Okay, gradual up move could continue in Naveen Fluorine then. That's a positive view coming in for the counter. Let's take a viewer query at this point of time. Uh, uh, One second. Okay, Madhukar is asking the view on Canara Bank, and she's asking whether or not she should go long on the counter. Canara Bank, if you look at from the so far this year, the stock has done relatively well, about 3%, 13% uptick that is coming in for the counter. But yes, for the near term, what does the chart indicate, Ruchit?
Structure is positive for Canara Bank. In fact, I think the PSU banking space as a whole, now the downside seems to be very limited from here on. We have already seen a good phase of relative underperformance compared to the private banks in the PSU banking space. But certain stocks within the basket, such as SBI is there, Canara Bank is there, Indian Bank is there, Union Bank is there. These are three, four names which have relatively done well and have shown some consistency with regards to their price up moves. So I think yes, Canara Bank can look for buying opportunities. 111 is a good support for the stock. So one can keep a stop loss somewhere below 111 on the long positions and trade with a positive bias.
Okay, 111 stop loss for Canara Bank that is coming in. All right, let's take another viewer query. Savita Jade is asking the view on Amber Enterprises. The stock has been doing well from the past 1 month. 12% uptick coming in for the counter. And if you look at from the year-to-date perspective, then also, however, a very choppy move, that is what it suggests. But yes, from a near-term perspective, what can we expect on a target levels, Ruchit?
From a short-term perspective, I think the trend still remains positive. Last few weeks, last couple of weeks, I think the stock has already seen a breakout after coming in from a consolidation phase. And the volumes on this last 1 week has also been good on number enterprises. So we can see an up move towards somewhere around 7,800 levels in the short term.
Okay, 7,800 levels on the short-term perspective for Amber Enterprises. Let's move on to another viewer query. Avinash is asking on Godrej Consumer, what is the view on the counter? Yesterday, the stock did quite well given the Q1 update saw a healthy momentum. The stock price did jump about up to 6% or so. It's seeing a bit of a cool off in today's trading session, but so far this year also the stock has been on a good run. But yes, from a short-term perspective, Ruchit, any views on the counter?
So overall, as you spoke that FMCG is one space where, from a risk-reward ratio perspective, it's favorable because this is only one sector which has not participated in this entire uptrend in last 2-3 months. And the price-wise, I think the downside seems to be very limited from here on. Godrej Consumer yesterday opened with a significant gap down after a gap up after a corrective phase, and hence this gap around 1200, 1220 will now be seen as a very crucial support on any kind of decline. So yes, already the stock is up since yesterday. So, but still, I think one can initiate fresh long positions over here, but keep some room to average out or buy more positions if the stock sees any minor corrections to fill out this gap, which is around 1220. So buy at current levels with some room to add more positions if we see any kind of minor dips in near future.
Okay, all right. Let's take another viewer query then. Arpan Kar is asking the view on Garden Reach and Cochin Shipyard, both of these counters. I know, given that the defense stocks have seen a good rally in the month of May itself, it's seen a little bit of a cool off after that, a little bit of a consolidation for both of these counters. But yes, from a near term perspective, what are your thoughts on both of them, Ruchit?
So I think very short-term consolidations could be seen, but good thing is that whatever corrections or minor dips that we have seen in last 7 8 trading sessions in GRSE, the volumes are quite low compared to the volumes that we had seen when the stock was going up. So which is a good sign. Now 2,800 is the immediate support for the stock, and for Cochin Shipyard also, I think similar structure is there where price declines are not led by any kind of high volume based selling, and 2000 is a good support for the stock. So these two supports are there for these stocks until these levels are intact. It's no advisable to hold on to the existing long portion.
Okay, all right. Let's take one stock in focus also, that is your macro tech developers. We did see that the company come out with its Q1 business update, and the company reported a 10% year-on-year increase in pre-sales for the quarter, and even collections that rose by about 7% on a year-on-year basis. Now, the firm has said that it has added 5 new projects across Mumbai, Pune, and Bangalore as well. But for so far this year, the stock hasn't really moved anywhere. But how does the second half look like, Ruchit, for macrotech developers?
Overall, I think the real estate sector as a whole seems that would witness some good buying on any kind of declines from current levels. And as we said earlier, so only a couple of names within the sector. One is DLF and second is Macrotech Developers. Are stocks where, in case whenever the stock index shows any kind of up move, the leadership could come from stocks from these two names. So the 200 DMA for the stock Macrotech Develop is around 1300 kind of levels. So in any kind of decline, if comes around 1300, those would be good levels where some buying opportunities should be seen. So at current levels, I would advise to keep a buy on dip approach and look to buy around 1300 where the risk reward ratio would be favorable.
Okay, all right. Let's take a viewer query at this point of time. Nitin Shahji is asking the view on Aeroflex. Aeroflex, if you look at from a 1 month perspective, the stocks has seen a good run. But yes, from a 6 months perspective, the stock has been exhibiting a little bit of a negative trend, but it's picked up pace from its June low levels. Anything that we can watch out for in the near term? Can you believe that this rally is sustainable?
Needs to surpass the resistance of 220 for any kind of trended up move coming in the stock. As of now, looking at the recent volumes along with the price up move, it seems that maybe the price wise corrective phase is over for the stock. But some time wise correction or consolidation could be there in the very short term. 180 to 220 is the trading range where we could expect some sideways trend or consolidation in the short term.
Okay, all right. Some consolidation could be on the way. Let's take a viewer query on that note. Kartikeya Singh is asking the view on Garware high-tech film, and he's asking what are the support levels from which it can bounce back. If you look at from a year-to-date perspective, the stock hasn't really moved anywhere, Ruchit, but to answer his query, any thoughts you have?
The stock is now trading around its important 200 EMA support, and 3,500 to 3,600 is a support range for the stock. As of now, the structure does not seem much positive. There are no signs that the stock would see any kind of significant up move from current levels. But if the stock breaks the 3,600 mark, then we could see some further down move in the stock. So I won't recommend taking any more fresh positions in the stock. On existing positions, you can maintain a stop loss below 3,600.
Okay, maintain a stop loss between 3,600. Let's take one stock in focus, that is your Titan, because the company did come out with its Q1 business update and the stock has been reacting quite negatively, 5% downtick at this point of time. If you look at from a Q1 business perspective, the company reported a 20% year-on-year growth in its consumer business. It has added about 10 new stores during the quarter. But if you look at from April lows, the stock has done well. But if you look at from the brokerage's perspective, they're quite conservative on the counter. If you look at Morgan Stanley, they have maintained their overweight call, but the brokerage firm believes that the quarterly update was a big miss on jewelry growth, while the buyer growth was quite flat at this point of time. But yes, how does the near term look like? The stock is up from April lows, but today the counter is not reacting well. 5% downtick coming in.
The stock has breached its important support today with this gap down opening, and we can see that in just initial 15-20 minutes of markets opens, the stock has seen a downtick post gap down opening with very high volumes. So I think whenever we see such volume-based selling happening, then those stocks tend to show a relative underperformance in the short term. So as of now, seems a bit negative, and on the lower side, the 200 EMA support will come around 3,400 kind of range, which could be tested. So avoid any bottom fishing for now. Maybe the stock could see some more time-wise as well as price-wise correction in the near term.
Okay, all right. Price-wise correction could be possible in the near term for Titan. Let's take another viewer query on that note. Nitin Shaji is asking the view on Kitex. If you look at from a 6 months perspective, the stock has delivered, but however, it's fairly range bound if you look at from a 1 month perspective or so. Anything that you're watching out from a near-term perspective, Ruchit, on the counter?
So one can keep a bit mid-term perspective and continue to hold long positions. High top, high bottom structure is still intact in the stock, and 250 to 45 is a range where the stock has recently formed a good support base and another higher bottom. So till that is intact, of course, it's not that high volume stock where we can expect any no fast moves, but yes, the overall trend is not negative. So continue to hold on your existing long positions. A gradual up move could be seen over a period of time.
Okay, all right. A gradual up move could be seen over a period of time. Let's take another viewer query on that note. Avinash is asking the view on roto pumps for the long-term horizon. If you look at from the April lows, the stock has done fairly well, 40% uptick or so that we can see. And since then, the stock has tried to pick up pace and play a catch-up also. Do you expect this rally to be sustainable going ahead, Ruchit, for roto pumps?
Yes, I think no, the stock has seen a good support base on any kind of dips that are coming, and gradually whatever declines are coming that are getting bought into. So overall trend I think still remains positive for the stock. The volumes are also good. Initial targets should be seen somewhere around 330 from a short-term perspective, and from a longer-term perspective, 345 is where one can expect a move. So one can continue to hold if there are any existing long positions.
Okay, continue to hold if there is an existing long positions. Let's take another viewer query. GC Prakash is asking the view on HDB Financial Services. I know the chart is quite short at this point of time, Ruchit, but anything that you have, any view on the counter? Should he hold, sell because he's bought it, because he got an allotment during the IPO price?
So, frankly, no idea because of it's listed just 3 days ago. I think
Yeah.
better to take update from any fundamental analyst who has a coverage on this one.
Okay, all right. All right, let's take a look at some of the textile stocks at this point of time, because we did see some tariff announcements that did come out from Bangladesh and of course Vietnam, the two basic textile hubs at this point of time. But yes, on the textile stocks, what is your view on the entire KPR Mills or even Arvind Fashions at this point of time, Ruchit?
So of late, some buying interest has been seen in textile stocks such as KPR Mill is there. So I think no, we could expect a gradual up move over a period of time, but the momentum is not that positive where we should see any kind of big moves in the short term. So I would recommend to continue to hold a long positions or even fresh buying can be done in stocks such as KPR Mill or even Vardhaman Textiles, but more from a midterm perspective or not from a trading perspective.
Okay, from a midterm perspective, not from a trading perspective for that view on the counter. And of course, we've seen a little bit of a pickup in buying in oil sensitive stocks also. But yes, what is your view on the counter? The crude prices are off with 16% from the peak levels that we saw. And of course, today also the crude prices were steady at around $67 per mark. Ruchit, any views on any of the oil sensitive sectors, be it your Asian Paints or even for the tires for that matter?
So I think OMCs of late have seen good buying interest from the low. So OMC overall structure seems good. IOC is one of the stock where technically structure looks positive. Consolidations breakout has been seen up move supported by good volumes. So this is one space where the short term trend remains positive. And apart from this, from the oil sensitive no names, I think Castrol is another name where overall structure is looking quite positive. Symmetrical triangle breakout has been seen recently in Castrol India. So this is one stock where positionally we are expecting a good up move to happen from current levels. So the risk reward ratio is also favorable to go long at current levels with stop loss below 217 for potential near term targets around 238. So Castrol can be bought at current levels, and IOC is another name where the structure is looking positive.
Okay, all right. All right, just one last question before we let you go, Ruchit. What are your top picks at this hour? Anything that you want to list it out?
Yeah, so overall, as we said, that it seems that more we would go through a time-wise correction or consolidation phase in the short term, but one can take a very no stock-specific approach, from a trading perspective. One is Castrol, which I already told that one can look for buying opportunities over there. That stock is looking positive. Ultratech Cement would be another name which I would recommend creating fresh longs at current levels. If you look at last 1 year's history, then the stock was in a consolidation phase, and we have now seen a breakout from this consolidation. So we expect a good gradual up move to happen in Ultratech Cement from current levels. Keeping a stop loss below 12,100, short-term traders can look for buying opportunities in Ultratech Cement for potential short-term targets around 12,700, followed by 13,100.
All right. All right, those are the stocks that we need to watch out. But with that, we have to let you go, Ruchit. Thank you so much for your time and joining us.
Thank you, Lynn. Thank you.
Okay. All right, let's take a quick check of the markets before we move on to our next guest of the show. We are off the day's low, and of course, we have flipped into the positive territory. Sensex up about 84 points, and Nifty above that 24,450 mark at this point of time. But yes, the volatile swings are present in the market, given that the market is still in search of the next trigger to watch out for. But yes, the FMCG index, which was in the red, has flipped back to the positive territory. But yes, once again, flat in the trade at this point of time. Nifty Auto Index continues to not do well with about 1.1% cut. Bank Nifty, however, is trying to play catch up, and it's seeing a gain of about nearly 0.5% or so. Nifty IT Index continues to be bogged down ahead of the Q1 results. Pharma Index seems to be not doing well with about 0.5% cut. And if you look at from the mid-cap and small-cap, the broader end of the markets, that also seem to be quite, mild and flat in the trade at this point of time. But yes, let's quickly move on to our next guest of the show. We have Trideep Bhattacharya, President and CIO Equities of Edelweiss Mutual Fund, joining us. Trideep, what is your first assessment of the 14 letters that have been sent out to Asian countries? Barely any change from the Liberation Day, but what can we expect from India?
Good morning. Thanks for having me on your show. I think the first thing that I have been sort of, saying, which came out in this as well, that this 90-day window, is not not any sacrosanct time that one could rely on, that after this, the tariff or the trade-related war will go away. That's the first thing that I would say. And it's important to realize is the moment you let that sink in, you have to understand that this sort of a tariff situation, which is basically toggling around the rates and being subject to negotiation, if it continues on an ongoing basis, creates a bit of business confusion for a good while, which is not good for business overall. So I would say that generally from an economic standpoint, lingering on of a trade war related issue is actually a negative. Um, Now, within that, if you look at from the way the numbers stack up on the textile side, for instance, if you look at whether it's Bangladesh or some other countries on the Asian side, the rates are kind of broadly similar. Whereas if from an India standpoint, what that means is it works out to be relatively positive, which is why you're probably seeing a bit of buoyancy in the textile names from India today. But these are all transient in nature. I think I don't think the final deal has been signed as yet, so I don't think we can count our chickens. Our trade deal, the mega, the motherhood trade deal, is still remaining to be done. It's basically an uncertain situation from a business standpoint that prevails and probably going to prevail for one more month. My hope is that it resolves sooner than later, because if it doesn't, then it will have economic implications.
Okay, all right. Trump is saying that we're close on the deal, but we'll watch out when the deal is actually signed. Trideep, how are you finding the valuations at the current juncture? Majority of the experts said that Q4 could be the end of the earnings downgrade cycle. So can we expect upgrades this season at least?
I think you would see probably the next couple of quarters to be on the conservative side, a bit of a transition quarters, if I may call it that way. The real action with regards to earnings upgrades would probably start somewhere around festive season. And thereabouts. It could start a little earlier also, depending on how monsoon and a few global variables pan out to be. But broadly speaking, we are in the last, I would say 10-15%, in the sense the last decile of earnings cut, if I may call it that way. 90% of the pain with regards to earnings is done. Little bit remaining, and that will be spaced out over the current quarter, which is the June quarter, and or the September quarter, depending on the sector you are looking at. But by the time we get to the back half of fiscal year 26, I would say that earnings would start to be on the mend, and that would be genuine good news for Indian markets. Over a period of for long-term investors over a period of time, because we'll be basically breaking the almost about 1.5 years of earnings downgrade cycle, so to speak. Markets at the moment appear fair value though.
Okay, all right. Trideep, now everyone is betting big on consumption revival. Urban demand trends, they're expecting to improve. And if you look at the staples business updates, some sequential recovery is also visible. But given HUL, Godrej Consumer, Dabur, they have been underperformers for the past 3 to 5 years. How do you expect this basket to move going ahead? Finally, an outperformance can we expect?
So we have been positive on consumption as well. We called out actually consumption to be the dark horse of calendar year 25 at the beginning of the year. And I would say since then, the catalysts or the events have actually lined up quite nicely for the sector. And these have been, first, a meaningful oil price correction. Second, inflation coming off. Third, liquidity conditions in the economy easing. Fourth, monsoons being a couple of weeks to a month early, depending on which part of India you're looking at. And finally, the tax stops given by Honorable Finance Minister coming into effect. All of that means that, again, as we get towards the back half of the year, you would actually see consumption pickup starting to happen. And we are a believer in that. The way we slice and dice that consumption pickup is that broadly, if you divide consumption into 3 buckets, one is luxury consumption, second is mass consumption or the urban consumption, and third is rural consumption. Between this, the luxury consumption has been strong and will continue to be strong, will probably gain momentum. The rural side of the consumption will actually depend on monsoon, and the fact that inflation has come off would mean that that's also on the uptick. What has been sulking, has been weak, has been the mass consumption or the FMCG plays, or for that matter, the urban consumption that you're talking about. That we expect a gradual recovery to happen, but nonetheless, there would be a recovery. But of the three, it will be the slowest to recover over a period of time.
Okay. Trideep, what is your take on banks? Credit offtake is something that the industry has been struggling with. Do you expect margin moderation to be a pain point this quarter too?
Yes, I think margin moderation would see at the initial phase of rate cut, which is where we are going through right now, as a transient phase where rate cuts are yet to be passed on fully, and hence depending on the shape of the book, the banks particularly would see a margin compression maybe this quarter and next to a certain extent. But this is well anticipated and this is well known from a market standpoint as well. What is interesting and worth looking out is once the rate cut transmits through the economy, what sort of credit growth do we see on the other side? And there, I think there is some ray of hope that after the transition or the transmission happens of the rate cuts, we would see credit growth revives against the back half, towards the back half of fiscal year 26.
Okay. Trideep, what about the IT sector? Mid-cap IT is where the interest has been at present. How would you suggest investors to approach the large-cap IT names at the current juncture? Should they remain on a wait-and-watch mode?
I think the sector has actually done quite well from the gallows of March, April, when Trump announced tariffs for the first time. I would say that was a time where expectations were at its lowest with regards to macro demand, and earnings estimates were well underpinned. From there on, share prices in general, depending on whether it's mid caps or even large caps, are up anywhere between 10 to 25%, which is a meaningful rally, so to speak, in the context of the growth of the sector. So I would say that from here, we would be neutral IT and wait for pullbacks for turning positive. But we would expect pullbacks to be a buying opportunity rather than selling opportunity, because as we move on to calendar year 26 and Trump-related tax cuts start to come in vogue, that will be positive for the demand of Indian IT. But it will take some time to kind of come for that to reflect in the numbers. So I think a bit more longer duration than the other sectors that you asked me for, but direction would be on the right side.
Okay, so the big beautiful bill could usher some positivity in the IT sector. But yes, Trideep, anything that you're underweight at the present? We have discussed a slew of sectors at this point of time. Anything that you are believing that market is still a little cautious at this point of time?
No, so we have been underweight on the commodity-linked sectors for a while and continue to remain the same, whether it's oil and gas or metal and mining. We think that keeping tactical rallies aside, we think structurally oil would probably be a range-bound commodity, and with a lower bias, and metals and mining could have a bit of a the world is going through a transition where it's less commodity dependent and more, or it's becoming commodity light, shall we put it that way? And hence we've been underweight these two sectors. We continue to remain the same. While we do have some stocks in these sectors, but our sectoral weightage would be lower than what the benchmark weightage is.
Okay. All right. On that note, we have to let you go, Trideep. But thank you so much for your time and joining us.
Pleasure.
All right, let's take a quick check of the markets at this point of time, how we stand at this present, because we did flip into the positive territory. We're still in the positive territory, but yes, flat with a positive bias. That is where we are standing up at. Nifty is also above that 25,450 mark like I was mentioning earlier today. If you look at from the sectoral perspective, Bank Nifty, that continues to do well with about 0.4% gains. Other than that, Nifty Energy sector is seeing a little bit of a buying interest. Nifty Metals, however, is also doing well, continues to shine in today's trading session. And private banks and PSU banks both remain on a steadfast. On the other hand, IT index, that reflects a bit of a negativity, 0.1% cut coming in. Nifty FMCG index, trading between the green and of course the red, but yes, very flat and mild in today's trading session after yesterday's good moves. And Nifty Realty Index also seeing a cut of about 0.3% or so. If you look at the broader end of the markets, mid-cap and small caps, both of them are flat at this point of time. Mixed trends coming in from there, but yes, they have been underperforming the benchmarks at this point of time. But yes, on that note, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.